Bloomberg's Amy Morris reports.
Bloomberg has built the biggest database of COVID-19 vaccinations administered, with more than 119 million doses given worldwide so far. Health officials say it'll take 70 to 85% of the population to be vaccinated to get to normal, so it'll be another year before the U.S. reaches that threshold. But a little more than 7 years for the whole world to get there. As vaccination numbers pick up, the time needed to hit that 75% threshold will fall. In Washington, I'm Amy Morris, Bloomberg Radio.
Actor Christopher Plummer, who charmed us as Captain Von Trapp in the film Sound of Music, has died at the age of 91. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. I do have to say that Christopher Plummer, for any of my family that might be listening, my mom loved Julie Andrews, so we grew up. It used to be The Sound of Music would be on, I think, around Thanksgiving, and we would watch it. Remember when TV, I don't know if you remember,
yeah,
when TV was like destination viewing and you had to like set the clock and get dinner done. And but we just grew up, I could probably do the whole movie for you right here, and all the singing as well.
Yeah, it was a classic in my house too.
Yeah, right? And
yeah.
It was just very sweet. I don't know. So anyway, I just wanted to say that because it really kind of warms my heart. And sorry to see his loss, and we're thinking about his family. All right, virus.
Yeah, a lot of headlines to get to when it comes to the virus. We got a little bit of good news from AstraZeneca, hearing that the vaccine is just about as effective against the new strain of the virus that emerged in the UK. That's according to its co-developer, the University of Oxford, because that has been a big part of the conversation. How well are these viruses going to work against different mutations?
That's a big thing.
I mean, vaccines, excuse me.
Don't you think it's kind of interesting right now what we're seeing is even people who are trying out experimental vaccines, they're saying, listen, in the control group or the group that doesn't normally get the vaccine, they feel like that's not fair to keep those people exposed. So let's give them a vaccine that's already approved, but then also test it against a new one. Like, there's lots of things going on, or doubling up on vaccines. I think we saw that with the Chinese and Russian vaccine. There's a lot of like experimentation going on.
Yeah, science playing out in real time.
Yeah, totally. And this, as we should remind everyone, global cases now exceed 105 million. Deaths are near 2.3 million. More than 119 million shots given worldwide. I know there's several members of my universe that have been able to finally access the vaccine. So I do feel like there's things that are opening up at this point. But the levels, cases, things are coming down, but they're still at high levels.
They are, and we're still looking for that vaccine rollout to speed up. In the meantime, New York has decided to shift unused hospital worker doses to those who are at high risk, reallocating unused hospital worker COVID-19 doses to those who with medical comorbidities. That's what Governor Andrew Cuomo said.
Yeah, I think that's, it sounds really smart, right? And just making sure that you're getting them out. Like, the more people that we can vaccinate, we know it's better for the overall population. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pelleton. Up Friday and up week, stocks extending their weekly rally after weaker than forecast jobs data this morning bolstered the case for President Biden's $1.9 trillion coronavirus relief package. S&P up 15 off session highs, still at a record, up 0.4%. NASDAQ also looking at a record, surging another 72 points today, up by 0.5%. Dow Jones Industrial Average at 31,130, up 74, up by about 0.2%. 10-year down 5/30 seconds, 10-year yield 1.15%. Gold up $17 the ounce. That's an advance of 1%. Silver up now by 2.9%. West Texas Intermediate crude up 1%, 56.77 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So there's a sobering story. Nancy mentioned it, Nancy Lyons earlier. It really caught all of our attention. We talked about it on our morning call. It's a story that asks, when will life return to normal in 7 years at today's vaccine rates, was the answer. And that's based on a Bloomberg calculation that's also based on data that shows how long it will take states and countries to vaccinate 75% of their population.
So the thing that's making me scream out loud when I hear that statistic is that, you know, that's at today's vaccination rates, and we expect those vaccination rates to increase significantly in the future.
Correct, right.
But otherwise, I'd be screaming.
But I'm with you. So let's see what Dr. Ian Lustbader has to say about, see if he's doing any kind of screaming. Clinical professor of medicine at NYU Langone on the phone in New York City. Although I don't feel like you're a screamer, to be quite honest, Ian. You're pretty level-headed.
Yeah, happy Friday. If you guys want to scream out of me, I'll be happy to produce one. We try and do the quiet screaming that goes on. Those are the challenges and frustrations in medicine. We see it all the time. And, you know, this is just one of the challenges, is really getting people vaccinated or people even adhering to medications. We still have a lot of people who are vaccine hesitant. And I agree with you that we are not doing a great job in acquiring the vaccines and distributing the vaccines, and I think there's plenty of blame to go around. It's not like we didn't have a year to say, okay, a vaccine is coming somewhere. What is going to be that last mile of how to deliver it? And this really should have been worked out a long time ago, and still is. There are a lot of kinks in the system.
Hey, isn't that vaccine hesitancy, isn't that improving as people are learning about more and more people within their universes getting the shot?
Yes, I think slowly that is the case. And we certainly see, and we can talk about that, different countries. You know, Israel has a high vaccine rate. And I think part of that is maybe more of an acceptance, you know, that this will be beneficial. I think to some degree in this country, you know, there are populations, even in the healthcare community, that are still hesitant, you know, and rightly say this is, you know, a new vaccine, messenger RNA, although they're not all messenger RNA, certainly not the J&J and AstraZeneca vaccines. And so there is some concern, but I think we have a lot of data that it really is safe and effective. Nothing is without risk, unfortunately. There can always be some.
And Dr. Lustbader, we did get some positive data from Governor Cuomo today, at least as far as New York State is looking. Hospital worker vaccination rates reached 75% as of February 4th. That's up from 63% back on January 18th. And the governor's saying that hospitals have one more week to vaccinate their staff, and then those unused doses will be shifted to local health departments.
Right. Certainly, I know the statistics at NYU is, in terms of physicians, we're over 85%. So there's a relatively small number that have not been vaccinated. And that certainly is a good number. I'm not sure we'll ever get to 100%. Certainly, some of the other healthcare providers and ancillary staff do have some vaccine hesitancy. Those numbers are lower, and it certainly is reasonable if the frontline people are not going to use it. Absolutely, that should be distributed to others. And there is still a little bit of a debate or issue with, you know, who should be giving these out and how to give it out. You know, the state and city have centers. Some of the private hospitals like NYU are certainly very efficient. And it really appears we all should be giving this out, and there may be some benefit or perceived benefit by either the state or city, perhaps if they're getting FEMA money or some financial incentives. We have to make sure we have aligned incentives that everyone has access to the vaccine and everyone should be motivated to give it out. And I think that's not fully worked out either.
Well, and do you feel like, though, that there's any improvement in terms of getting the vaccine out? I'm just curious. New administration, I think there was a lot of finger pointing, and I think the expectation was a new administration might come in and be organized in a different way, and that meant we'd see more of the vaccine coming out. Have you seen any specific changes, Dr. Lustbader?
I have not seen huge changes. I know that we are certainly getting through a lot of our populations. For example, the 75 and older, teachers, 65 with chronic diseases. But there's still a number of patients who want it, who are below 65 and still at risk, who have not gotten it yet. So we certainly have a big group that would like to be vaccinated that have not had access to it. And I think there's plenty of blame to go around. I think now we're getting more delivery. And I think the state certainly has been holding some vaccine, whether they're planning to administer it or distribute it to local authorities like the city. But I think the whole process of how the vaccine arrives and is distributed is a little opaque, meaning anyone who can give it out, in my opinion, should be giving it out. And I don't think that's completely happening, and I don't think it's exactly clear why it's not happening.
Okay, so very briefly, the best way to speed up the administration of vaccine in the U.S.?
Well, I think we have centers like the Javits Center. We have certainly hospitals and healthcare systems that are set up with plenty of nurses and scheduling to do it. Certainly in other countries like Israel, you have the Public Health Service giving it out with help from the IDF and so forth. So I think we need more efficiencies in acquiring the numbers of vaccine and distributing it to people, centers who can distribute it, and that will include eventually local pharmacies. But at this point, there are storage issues with that.
All right, Ian, hang on. We're going to do a little bit of news and come back to Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center. Having said that, I just want to mention a headline that just crossed the Bloomberg. The U.S. House of Representatives clearing the Senate-adopted budget plan to back President Biden's stimulus plan. You remember there was an early morning vote in the Senate along party lines that really showcased the Democrats' ability to proceed on a COVID relief bill without Republican support, so continuing to see some progress. This is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, it's the Friday edition of Bloomberg Business Week. Carol Massar, Tim Stanovic. Earlier headline on the Bloomberg was Germany's Angela Merkel planning to extend Germany's lockdown by 2 weeks. So, you know, we see this. It's still tough going around the globe, Tim.
Yeah, look, different parts of the world are moving at a different pace when it comes to vaccinations. The EU significantly behind the UK, Israel, and the United States. Canada, too.
Yeah, exactly.
Significantly behind.
All right, we're going to continue talking about the virus and the vaccine with Dr. Ian Lustbader over at NYU Langone. We'll get back to him in just a moment. Right now, though, back to Charlie Pellet and check on that trading day. Hey, Charlie.
We are higher across the board. Carol Massar, happy Friday to you both. By the way, major industry groups in the S&P are advancing. Benchmark gauge climbing toward another record, best week since November. Stocks extending gains after weaker than forecast jobs data bolstered the case for President Biden's $1.9 trillion coronavirus relief package. S&P up 17, up 0.5%. The Dow up 100 points, up 0.3%. NASDAQ up 80. For NASDAQ, that is a gain of about 0.6%. 10-year down 6/32, 10-year yield 1.16%. Gold up 1%, 18.11 the ounce. Silver up 3% today, and West Texas Intermediate crude up 1.3%, 56.98 a barrel. Brent is at 59.47. AstraZeneca's COVID vaccine is equally effective against the new strain of the virus that emerged in the UK, according to a study by its co-developer, the University of Oxford. AstraZeneca's ADRs, they're down today by 1.2%. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
It's clear that the vaccine trackers will be changing their projections as we continue to increase our manufacturing capacity. And something as simple as even the J&J vaccine coming on the market could have a massive change in terms of the timeline in which we could get to a protective level of immunity in the population.
He mentioned J&J. Its share is up right now by 1.5%. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the other vaccine names today, BioNTech lower by 0.3%. Moderna is up by 1.3%. And as I mentioned, J&J up by 1.5%. Recapping, stocks higher. The S&P could see a record up 17, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. I want to get right back to Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU. I can't say it today. I don't know why. NYU Langone Medical Center. On the phone from New York City, joining Tim and myself. Hey, Ian, one thing I wanted to ask you about, there's a story out there about Russian vaccine developers talking with China's CanSino Biologics to test a combination of their shots. They're looking for better results in terms of the efficacy. I feel like there's a lot of experimentation going on. This makes sense. It's logical. We're going to see this. And might we see a better outcome if you combine two vaccines?
Yes, there's no question that there's some evidence that either two different kinds of vaccines, either together or separate in time, may be very effective. Obviously based on a variety of reasons, the red vaccine, as it were, may be more of a concern. And I'm not sure you have to reinvent the wheel. The mRNA is very effective. The J&J, which uses an adenovirus, very effective. I think it's more a matter of maybe national pride, not linking to the West, perhaps, with Russia and China. But I don't think there's any reason to try another approach since we have data that's very good, anywhere from 77 to 95% effective. Why reinvent the wheel?
Well, I do wonder, Dr. Lustbader, when it comes to the vaccine and the new strains, if we're starting to get more and more good news about the way they work against new strains. Because as we mentioned earlier in the show, we're learning that AstraZeneca's vaccine is just about as effective against the new strain of the virus that emerged in the UK. That's according to the University of Oxford, which is its co-developer. What have we learned in the last week about the resilience of these vaccines against the new strains?
Well, I think it's a process of learning. You're exactly right. And at this point, it does seem that the vaccines do provide some protection. And again, we're really interested in that 100% non-hospitalization rate. Even if people get somewhat ill, most people do very well with this. So it does seem that the antibodies, this polyclonal antibody to spike protein, seems to be very effective, even with some mutations. Now, again, if the virus mutates more dramatically, it may be less effective, the vaccine. But also, if the virus mutates too extensively, that spike protein, which is what attaches to human cells, if that mutates too dramatically, it's not going to be effective. So I think there's a little bit of a limit as to how much the virus can mutate. And again, this also argues why we need to get as many vaccines out as possible. And certainly if you contrast Israel as a country with almost 75% coverage in a few months with the United States, you have to say, what lessons can we learn from that? And I think there are a number of lessons that we can learn when we compare efficiency of another country.
What will we get off of this? And I bring this up in terms of the data that we're accumulating, I guess, as we go through this pandemic. There was an interesting story in using patient data. AI apparently can make about a 90% accurate assessment of whether a person will die from COVID-19 or not. And this was some new research out of the University of Copenhagen. And they look at things like body mass index, gender, high blood pressure, I guess, are among the most heavily weighted factors. And then they use this to predict the number of patients in hospitals who might need a respirator and then determine who ought to be first in line for vaccination. So I wonder, as we go through this process this past year, how will we, because we will have another pandemic at some point, how might we use something like AI and data to approach it differently the next time around?
Well, I think the AI and data is very helpful, and we're just at the beginning cusp of how AI can help us. But certainly we do know, at least with this pandemic, that there are high-risk groups, and we knew that even back a year ago in March. Diabetes, hypertension, obesity, those patients did poorly. Older patients, and that's why we had these various classes of which people should be vaccinated early, above 75, then above 65, concomitant diseases. So I think that is helpful, and I think AI is helpful. But I think in a way what would be more helpful is to get back to other countries like Israel, universal health care records, so that we know what people are doing. That's how you get the information, and that's why Pfizer partnered with Israel, because they can mine that data. Granted, it is a smaller country. This way we can address people with vaccine hesitancy. We can alert people who have these other issues. Hey, you're at a high-risk group. You really should think about this. So there are many more efficiencies we could get out of our healthcare system if we thought about it and planned for it.
All right, one last question. You got to be quick. Chiefs or Buccaneers?
The Buccaneers.
Just checking. Have a good and safe weekend, Ian. Always good to check in with you. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone from New York City. I'm going to ask you later on, Tim.
All right, we got to go.
Let's get a check on world and national news. Over to Nancy Lyon we go. Hey, Nance.
Hey, Carol. Actor Christopher Plummer has died at the age of 91. He is best known for his role as Captain Von Trapp in The Sound of Music. At the age of 82, he also became the oldest actor to ever win an Oscar for Beginners, in which he played an elderly man coming out as gay.
It had everything in it. It had extreme tender relationships. It was just filled with a marvelous conglomeration of heart and bravery.
Again, Christopher Plummer, dead at the age of 91. U.S. employers added just 49,000 jobs in January, a sign the pandemic retains a tight grip on the economy nearly a year after it triggered a painful recession. Heather Boucher is a member of the President's Council of Economic Advisors and tells Bloomberg without additional aid, the economy will continue to sputter.
The January numbers are quite disappointing. They show that the pace of job growth is slow. And certainly over the past 3 months, it's a lot slower than it was earlier at the end of 2020.
The House has adopted the budget resolution that cleared the Senate very early this morning, and this sets President Biden's $1.9 trillion stimulus on a track to pass with only Democratic votes. Well, about half of Americans say the Senate should vote to convict former President Trump at the end of his impeachment trial that starts next week. A majority think he bears at least some blame for the Capitol insurrection on January 6. That's according to a new AP NORC Center poll. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. So this is our 9th most read story on the Bloomberg in the past 8 hours.
Wow.
Yeah, it's up there. It has to do with the Wall Street veteran, Peter Krause, and apparently is out there saying that investors should not be caught off guard by a market correction because some equities have been pushed into bubble territory and many catalysts for expansion have already been factored in.
Okay. Well, look, he
Makes
joins
sense.
us. Yeah, he joins those who have been sounding an alarm about bubbles after retail investors pushed up stocks like GameStop and AMC in the last couple weeks. That created a lot of volatility among various equities. He also, he formed his new firm more than 2 years ago. He previously was the co-head of Goldman Sachs asset management firm and CEO of Alliance Bernstein Holding. What he said that his comments come as equities have hit new highs. So 15% decline. Hey, you know what? After these numbers over the last year, wouldn't be that big of a deal.
Listen, I think it all comes down to how much of more stimulus coming is already factored in to the equity markets and asset prices already. I think that's one thing. But I will say that I think, having watched the market, especially coming off the financial crisis, that things work through the market pretty quickly. And I feel like there's a lot more transparency, whether it's, algorithmic trading or whether people tweeting or whatever, that I think things work their way through. I think even GameStop, to some extent, has worked its way through pretty quickly.
But one question I do
Even though
have
it's
is
up again,
if we do see a big pullback for any reason.
What's a big pullback, though, in your view?
Yeah, a 10 to 15% correction in a very short period of time. What ammunition the Fed has to actually prompt investors to buy stocks.
And I think if money still stays cheap, and, I hate to say, Tina, there is no alternative, but unless there is no alternative, investors will continue in searching for yield, continue to put money into the equity market.
Hey, that's a deep tease for what Dave is talking to us about later today.
Nicely done, tying it all up. Because what happens when we see a sell-off often, once it hits a certain level, we start to see buyers come back. But we shall see. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Records on Wall Street. Stocks are extending their weekly rally after weaker than forecast jobs data bolstered the case for President Biden's $1.9 trillion coronavirus relief package. The surge in GameStop today after Robinhood Markets removed limits on buying the stock, doing little to repair the video game retailer's weekly plunge of about 80%. GameStop shares are higher today, but by 14%, again, well off their highs. S&P up 15 right now. That is a gain of about 0.4%. The Dow up 94, up 0.3. NASDAQ up 74, up 0.5. 10-year down 7/30 seconds. 10-year yield 1.16%. Gold up 0.9%, 18.10 the ounce. And West Texas Intermediate crude up 1.3%, 56.96 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. February is Black History Month, and throughout the month, Bloomberg Radio is celebrating pivotal moments in U.S. Black history. Here with more is Bloomberg's Renita Young.
On this day in Black history in 1990, 28-year-old Barack Obama became the first African-American named president of the Harvard Law Review. The job was considered the highest student position at Harvard Law School. In a New York Times article the following day, Obama said, "The fact that I've been elected shows a lot of progress, but it's important that stories like mine aren't used to say that everything is okay for blacks." The Columbia University graduate and Harvard University law student, of course, went on to also be the first black president of the United States of America. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. So I'm so glad we're getting to this story. We tried to bring it to you yesterday, but the president had a press conference.
Stonks.
Stonks. Listen, he writes that the past 2 weeks broke a lot of people's brains when it came to how Wall Street works, and he totally got that right. So glad to bring you this story. It's in the magazine. It's Bloomberg Business Week Markets and Finance editor Pat Regnier with us on the phone in New York, along with Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn. Here we go.
A thing even now, but yeah, so much has happened in such a short moment, and as we were breaking news throughout the newsroom, I turned to Pat and said, I think someone needs to help us make sense of this all, and that person's going to be you. And he did a great job. He really did do a great job of putting it all together. And Pat, what do you think your big takeaway was here?
The thing that really I got thinking about was how, for a moment there, it looked like, people were really coming at Wall Street. But I just really felt like if you took a step back, what you could see, what we had been talking about internally, even before GameStop happened, was really how much, Wall Street was having a new moment of really getting into the pockets of regular investors, and in many ways, this has been a kind of a new imperial phase for Wall Street. And I just kind of wanted to walk through some of, the other things that are going on besides the retail trading revolution, and also talk a little bit about what the retail trading revolution has actually meant for most people. It's mostly been good for Wall Street, and has been I think questionable value for a lot of the people doing it.
And was that sort of just exacerbated last week? And the week before with GameStop?
Yeah, I mean, I think, you look at what happened there, and you could see, there was an exciting trading thing going on. Something has kind of happened in the culture where people are interested and excited about trading. I think partly because they have, a phone in their pocket that makes trading a lot more fun and enticing. It makes it a lot more like, using Twitter. As we often talk about with Twitter, it's like, you don't pay for Twitter, but somebody's paying Twitter, somebody's paying Facebook, and you ought to look at the incentives that are driving Twitter. It's not advertising, with the discount brokerage app on your phone. It's trading. They've created a psychological situation where trading is exciting and trading is fun, and that's because they get paid the more you trade.
Pat, one of the things that I thought you really pointed out well here is that for all the money that was sloshing around and probably will be sloshing around still for the foreseeable future, since Robinhood's now opened up the limits again, The real money is going for a different end game, which is basically the long bet on equities rising over the long term, and that's where the serious money is. So how did you think about that in the story?
Yeah, so first of all, if you've just been in it for the last decade, you've done really well. I believe the numbers are if you've been in a pretty boring S&P 500 mutual fund for the last decade, you've made 13.5% a year, which is actually huge once you've compounded that, and for a lot of that time, that's been a pretty boring business for a lot of Wall Street. They've been taking tiny expense ratios off of that, as people have been pretty happy to just kind of ride that bet. But now we kind of have a thing where there's more exciting, more fun things to do, and more things we can pull you into. So now you've got actively managed ETFs. You've got these SPACs, which are sort of like, get in early on this deal. You can be like a private equity investor too, if you get in now. That sort of the neon lights are flashing on top of things for you to get into the market and provide the capital for financial players that want to do it.
Pat, I have to say what's really cool about your story, and we've really all been talking about it because we needed somebody to kind of make sense of it, because there were so many different things coming from different players, and I think there were a lot of people like, well, wait, what exactly happened? The thing that I was really drawn to is that you say the fight over GameStop was partly just a fight between different parts of the Wall Street establishment. And that's what's kind of wild, because I think we were pitting it as a small guy, giant versus, or Goliath versus the giant. No, David versus the Goliath. I'll get it straight. But, small guy versus large guy, dumb investor versus smart investor. And that not necessarily was the case.
Yeah, we've already, we've found out since that there were some hedge funds who were doing very well on the long side, who managed to get out. Investors in a lot of these companies that went up were very quick to take money. Were very quick to take money off the table. There's a private equity firm that did quite well on its investment with AMC. And sometimes I think, like, boy, if you are buying a stock and those guys are selling it to you, and you're asking yourself, which of us knows the most about this company and what it's worth? Might not be you.
Right, exactly.
Hey, where does last week fit in when it comes to market history with this? Are we going to be thinking about this as in the context of, financial crisis or 2008 or .com bubble, anything like that?
Didn't it feel a little bit to you like, in our newsrooms and virtual newsrooms, like we were covering something that was almost as exciting and enrapturing as a market crash? Everything just kind of seemed to be crashing up, and for a lot of professionals on Wall Street, something really was crashing, which was kind of their sense of how this goes, but right. And it made people kind of question, what's really going on here? And I think we're going to have really serious discussions about that. But it's still in the background of, this other euphoria that I think is very familiar to people who lived through the 90s. And, I think, the obvious question is, well, if this kind of feels a little like the 90s, it's is 2000 around the corner? And, of course, the thing to always remember is, the famous phrase about the 90s stock market, irrational exuberance, was coined about 3 years before anything happened.
Right.
These things can go on a while.
Yeah, and I really do love, too, how you get into this whole idea that it's really a market that is prolonged, in the long run. We talk about this a lot at home. Hey, great stuff. Pat, thank you so much. It's in the magazine. Pat Regnier, Markets and Finance Editor at Bloomberg Business Week. We'll make sure it's on our Twitter feed. And our thanks to Jill Weber, Editor of Bloomberg Business Week, the new issue on magazines, online, and on the Bloomberg. For those of you listening in New York, D.C., and San Francisco, and watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. Stonks, and what was the other one?
Tendies.
Oh, Tendies.
Yeah. Tendies. It's the Reddit phraseology. You got to get it right, okay?
This is Bloomberg.
quarters. I'm Charlie Pellet. We move into the final hour of trading on this Friday, February 5th. Stocks higher across the board. S&P is on track for a big winning week. Stocks extending their rally after weaker than forecast jobs data bolstered the case for President Biden's $1.9 trillion coronavirus relief package. The House adopted the budget resolution that cleared the Senate early today, paving the way to pass a stimulus bill in coming weeks with only Democratic votes. Most major groups in the S&P are advancing. S&P up now by 13, a gain of 0.4%. The Dow off session highs up 77, up by 0.3%. S&P at a record. NASDAQ also at a record, up 70 right now, up 0.5%. 10-year down 8/30 seconds. 10-year yield 1.16%. Gold up 0.9%. 18.10 the ounce. Silver up 2.7%. And we have got West Texas Intermediate crude up 1.3%, 56.95 a barrel. A senior economic advisor to President Biden says disappointing growth in the labor market last month strengthens the argument to deliver more fiscal support to the economy. Heather Boucher is a member of the White House Council of Economic Advisors, and she was interviewed this morning on Bloomberg Television and Radio.
It underscores that without further aid, our economy is going to continue to struggle. We need to get that aid out to the families and businesses that need it. We need to make sure that we spend the resources we need to contain the virus so that we can all get back to work. And this report really does make that quite clear.
Oil rose towards $60 a barrel in London as global supplies tighten while the demand outlook improves with the rollout of coronavirus vaccines. West Texas Intermediate crude here in New York up 1.3%, 56.94 a barrel. Among some of the oil names, ExxonMobil up 3.4% today. BP down 1.2%. EOG Resources down 1.3%. Pioneer Natural up by 0.5%. Recapping, the S&P up 12 now. That is a gain of 0.3%. The Dow up 60, higher by 0.2. NASDAQ at a record up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's been just such a weird week because it is a jobs Friday. I mean, I listened to it this morning, was checking the numbers, watching market reaction, but it just feels like, oh yeah, it's jobs.
It's jobs, and it was a really bad report.
Yeah, pretty bummer. Pretty much of a bummer. We did see disappointing for a second month in January, only modest job growth. And just as kind of a reminder that it's still really tough out there for a lot of Americans and also those who have just kind of given up, which is really worrisome. All right, let's get into it with Becky Frankowitz. She's president at Manpower Group North America. She's with us once again on a Jobs Friday. She joins us from Chicago. Becky, good to have you back here with Tim and me. How are you? Tell us about your world and this jobs report. Does it make sense to what you are seeing with your responsibilities and with your team?
Yeah, hi, Carol. Nice to meet you, Tim. What I would say is that, I heard Tim say bad report. I heard you characterize it a bit, Carol, like a yawn. What I would say is the last time we spoke back in December, I talked about the labor market navigating recovery. And, we continue to navigate lots of twists and turns. We're back in positive territory a little, but it's sluggish. It's a sluggish step forward rather than the acceleration that, all Americans want to see. But I think more importantly, Carol, we're seeing I call them caution flags, 3 caution flags that I would encourage your listeners and all of us should be watching. And so I'll cover those briefly. First, we're seeing this 2-speed or this K-shaped recovery in full force. And what that means is, some skills are in rapid decline. Hospitality and retail continue to struggle, and yet some are growing. Professional and business services, showing good growth. Sales people, designers, marketers, those were up almost 100,000 in the report. And so this K-shaped recovery is definitely in full force. The second caution flag, I'd call it, is the first time since the pandemic began, and this hasn't gotten a lot of coverage today, we saw a decline in healthcare. Down 30,000, and these have been our heroes that have gotten us through the pandemic. And it's not a surprise because we know as the vaccine programs accelerate, we'll start to see that demand level off. But it is a first. And, the last thing I'd say, and close to my heart, is this SHE session. Mm-hmm. The SHE session is real, and the national labor force participation, rate fairly flat. but the percentage of women in the workforce fell by 0.2%, and that's the first decline since September. So, a couple of caution flags to be aware of.
And one thing I want to say, forgive me if it sounded like a yawn, because I didn't mean that, because I feel for, and I know people who have been hurt by this, but I guess it's just been a weird week where we were last week so obsessed with GameStop, and then it just kind of calmed down a little bit. And I don't know whether we're getting, Tim, we talk about this with the virus and vaccine, that we get a little immune to these numbers, and I do wonder if we get immune to kind of some of the big drops in the labor market.
Yeah, and Becky, I want to, well, go ahead, Becky.
No, I was just going to say I didn't mean it.
No, but I felt bad.
No, I just meant it as it's a bit uneventful. I mean, that's probably the way I'd characterize it. People feel it's uneventful, which is why I try to point out here's some new things that hadn't happened in the past, and because you lose the nuance if you just talk about the point in time number.
Can you talk a little bit about this idea of the she-cession? Because when people leave the labor force, and Carol alluded to this when she was introducing you, Becky, people dropping out of the labor force, that's bad because the longer somebody's out of the labor force, the harder it is for them to get back in when they're ready.
Yeah, so, as a result of the child care gap, women have been disproportionately displaced from the workforce in the crisis, particularly single women, by the way, have been impacted by unemployment last year and continuing into this report. And it's happening because almost half of school-aged children are learning remotely in some form or another, and women are disproportionately taking on those roles. And if they lose their job or if they choose not to go back into the workforce, they're staying home. And that will continue to exacerbate this, the gap that we have in wages in our country and around the world.
Isn't it amazing how that initially we thought, oh, wait, the pandemic, it's going to show everybody how easily we can work from home, and that might be a good thing for women who are juggling so much, right? We were optimistic about this.
Look, we have a 2-year-old. Anyone who says that you can work from home and take care of a kid doesn't work from home and take care of a kid.
Right, exactly.
It's impossible.
Right. Something's got to give. Well, so then having said that, what do we need to, as managers, heads of companies, as, people, we talk about the pipeline and bringing people through. What do we have to make sure that we are sensitive to going forward, Becky?
Yeah, so, Carolyn, we've talked about it before. Reskilling was important before the crisis. The crisis has made it urgent. Since the pandemic, we've been helping people redefine themselves based on not their title, not on their job title, I'll give you an example, but on their capabilities. So, for example, in hospitality and leisure, if you have a front desk greeter or a front desk manager at a hotel, your title isn't what's important. It's what were your duties? What were the skills that you had? And we've found a lot of migration and skill match between hospitality roles and customer service. Because if you ran a front desk at a hotel, as a manager, you have all the skills to be a customer service manager. And so I think that's really important for us as employers and employees, to open the aperture on yourself and think about your capabilities and your skills, not your title or your degree. And that's critical. And we've been helping people understand where is demand moving. So if you're in a financial clerk role today, on average in the U.S., that's $19 an hour, by the way. We can help you upskill to a financial analyst about $45 an hour, and it gives you the skills to be future-proofed and really looking towards the future. And, the last thing I would say, and you touched on it, Tim, this concept of more people working from home, and of course, I think it's 70% of the country now is still working remotely, but we have to build flexibility into non-flexible roles. And I want to highlight specifically manufacturing. We have built our manufacturing processes around shifts, and shifts are on a line. And we are talking to employers around the U.S. saying, okay, shifts can be around a person. The person can come in and out of the line. The entire line doesn't have to change out at the same time. And that brings flexibility into a traditional, inflexible role.
So I guess the question would be, what areas of growth are you seeing? Where should people be thinking about areas of growth when it comes to this economy?
And just got about 20 seconds here.
Yeah. So I'd say we're seeing hyper-concentration of demand in our country more than ever before. The top 20 jobs represent 50% of open roles.
Wow.
And those are jobs that move things. So ops and logistics, truck drivers, due to e-commerce, massive growth, transform businesses, IT, cybersecurity, app developers. And we're still seeing demand in the medical field around roles that help people. So those are the three areas I would focus.
Does it mean people, just quickly in 5 seconds, should get a college education or not necessarily?
I would think about your skills right now, and if you need to get more skills through education, do that, but think about your capabilities, not your title.
All right, good stuff. Becky, thank you so much. Becky Frankowitz, president at Manpower Group North America, on the phone in Chicago. Bloomberg Business Week brought to you by SEI. Crises bring out the best in people, character, community, partnership together as one. SEI, go to SEIC.com/IMS for more. Let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Citing the anemic jobs report, President Biden today showed signs that he's losing patience with the unwillingness of Republicans to join in on a spending plan that he believes adequately deals with the economic pain. Bloomberg's Irv Chapman reports from Washington.
The president said he would prefer Republican support, but he praised Democratic leaders for taking steps to do without it.
I've met with Republicans. There's some really fine people who want to get something done, but they're just not willing to go as far as I think we have to go. If I have to choose between getting help right now to Americans and getting bogged down in a lengthy negotiation, that's an easy choice. I'm going to help the American people who are hurting now.
The president insisted on sending out $1,400 checks, adding that without adequate relief, it will take till 2025 for the economy to recover. In Washington, Irv Chapman, Bloomberg Radio.
Republican Congresswoman Marjorie Taylor Greene says she feels free after being stripped of her committee assignments in Congress. Yesterday's bipartisan House vote was in response to Taylor Greene calling 9/11 and school shootings hoaxes and suggesting that Speaker Pelosi should be executed. Today, Greene remained defiant.
When the Democrats and 11 of my Republican colleagues decided to strip me of my committee assignments, Education and Labor and the Budget Committee, you know what they did? They actually stripped my district of their voice.
Super Bowl fans are going to be eating tons of cheese. To be precise, dairy farmers predict 20 million pounds will be consumed on Sunday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. It is TGIF. So happy. Carol Massar along with Tim Stanovic. This is our most read story on the Bloomberg in the past 8 hours. She is a friend of the show. I love talking with Cathie Wood.
Cathie Wood amasses $50 billion and a new nickname, Money Tree. I got to tell you, Carol, last week, okay?
Yeah.
My brother's a teacher in Seattle. Last week he texts me, hey, what do you know about ARK and Cathie Wood? Like, he's not somebody who follows the market, right? He is somebody who is at school every day, and he knows about her. That is the power.
How did he find out? Did somebody bring it up?
No, I mean, it's like, well, look at the performance of ARK Investment Management last year.
Well, listen, their assets under management crossed $50 billion this week, up from only $3.6 billion at this time last year, so 12 months ago, according to our data here at Bloomberg. In 2021 alone, investors have funneled almost $11 billion into her family of funds. I have to say, she has been very gracious and kind and given us a lot of time, and we have been talking to her since she began her funds when she first opened up. And for me, it was always just fascinating because this whole idea of disruption, whether it was in biotech, whether it was in technology, she just looks at the world. She's been a big proponent of Tesla and Elon Musk, even when he and the company were very out of favor, and it has turned out to be a really good play for her. But she just looks at those companies that are kind of changing the way we do things. Disruption, innovation, those are kind of two of her catchwords.
And here's something fun. In South Korea, retail investors are swarming to buy thematic products, and Cathie Wood has become somewhat of a celebrity. In social media posts, they refer to her as something that translates to Money Tree.
So that's her nickname.
That's her nickname.
It's so funny, too, because trending on social media today apparently is ARK merchandise. And they're going to donate 100% of the profits. So they've got swag for good apparel. I put that out on Twitter earlier. Anyway, check it out. We'll put out that story as well. It's just remarkable, her performance. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher across the board, indeed, looking at records. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, the Friday edition, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green right now. A Dow currently up 78 points. S&P's gained 14. NASDAQ rises by 66. The U.S. 10 yield at 1.17%. Gold is up 18 points. And transports gain 78 points. Among the main 11 S&P sectors, only tech was in the red. And leaders of the upside in the Dow were Nike and Cisco, while Boeing and UNH led to the downside. In other news, GameStop rose 14%. Biden says it's very clear the economy is still in trouble. And after earnings, Wynn Resorts rose 8%. Wrapping things up, Warburg Pincus is said to plan to launch 2 blank check firms. Live from the first breaking news desk, I'm Bill Maloney.
Okay, we thank you very much, Bill. And to hear live breaking news over to your Bloomberg Type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. So big games, Super Bowl coming up this weekend. And yes, it's about the teams, about the halftime show. And yes, of course, the commercials, including this one that definitely caught our attention. Check it out.
Did you know that Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it. Come on. Never mind. With GM's new Ultium battery, we're going to crush those losers. Crush them! Let's go, America.
All right, everybody. Of course, the dulcet tones of Will Ferrell. Everybody recognizes the anchorman, and it is about GM, and it is about Norway. This is pretty, just a lot of fun.
I love how he says losers. Losers.
He's really rough on Norway, to say the least. Let's get more on the commercial, the fun of it, but really the significance of it as well. Craig Trudell is with us, Bloomberg News Europe Auto Team Leader. He joins us on the phone in London, staying up late for us. Craig, thank you so much, because Tim and I love this story, and I'm so glad we get to do it with you. Tell us about the ad and the significance of it.
Yeah, you know, I have to say that the ad was great. The teasers were even better. They were great because it was not clear why Will Ferrell hated Norway so much.
Take us back there. Take us back there.
Yes. So GM first released a few videos, and the sort of premise of the videos, they were really short. They were maybe 10, 15 seconds long is all. And the videos asked, why does Will Ferrell hate Norway? And he was one of them, for example, he was crank calling someone in a pizza place in Norway and ordering 5 million anchovy pizzas and hanging up and laughing. The prime minister of Norway, this got her attention, and so she actually sent a tweet where she asked actually if he could send pineapple pizzas instead. It generated a lot of buzz even before the 90-second full video was released. It was revealed. I think those who know the car industry well, had a hunch that GM is really making an electric vehicle push, and Norway is sort of the capital of the world for electric vehicles. A lot of people don't really sort of understand or appreciate that, but last year, more than half of vehicles sold in Norway were electric, and that's way above anywhere else in the world. The reaction to this ad in the story that we've done today is, Norway taking a little bit of a victory lap and saying, Will Ferrell is right. There is no one in the world who's coming anywhere close to selling as many EVs as we are.
Yeah, I mean, the stats that you guys include in your story about Norway are incredible. In December, there was a record-breaking month for electric vehicle share of the market in the country. 67% of the vehicles sold in December were electric vehicles, which, we can't lose sight of the fact that Norway has incredible amounts of oil and his vast natural resources, right? I mean, that's not lost on us. I do wonder, though, where GM comes in with electric vehicles, right? Like, it is in the low single digits in terms of the worldwide penetration of electric vehicles right now. But where does General Motors, what chance do they have in actually in the next few years, building up that part of the business?
They're putting a ton of money into this. So Mary Barra has budgeted $27 billion on battery electric cars and self-driving vehicles. A big chunk of that, obviously, is going to be toward EVs, because they do have a sort of separate company that they do fully own, but in Cruise, that itself is bringing in a lot of investment, outside investment. So a lot of that sum is going to go to EVs. And this isn't their first rodeo in terms of Super Bowl commercials. Last year, they had LeBron James promoting the Hummer pickup that they showed for the first time last year. They have a lot of activity in this part of the market. They have already the Chevrolet Bolt, and they're going to have a crossover version of the Bolt coming. I do think that GM, is, far from competing with Tesla on a serious scale in terms of getting the kind of volume that Tesla has, but they absolutely are making a big push in this. And, it actually recently as well changed their logo for the first time in almost 6 decades, and put some emphasis on electric vehicles as sort of the tagline for that logo, with a tagline of everybody in, with the EV and everybody in, sort of highlighted. So they absolutely are trying to create a lot of buzz about this push. And hence we have, this big splashy ad that will air on Sunday.
Craig, are we likely to see an incredible ramp up when it comes to EVs? Because I was looking at a competing media outlet, and they did some estimates, some calculations, and that even with what everybody's saying, whether it's VW or GM, that with an average annual growth rate of about 50% in EVs between last year and I guess by 2025, EVs would still only account for about 15 to 20% of total light vehicle sales. Do you think it's still going to be a small number going forward for a while? And just got about 35 seconds.
Yeah, I do think that without a lot of support with subsidies, you're not going to necessarily see a huge change. I think the other thing that really helps is just regulation. You saw that be very effective in Europe, putting limits on CO2 from fleets, and we had a huge uptick in sales here in Europe last year.
Right, and we see also in Norway that they are really looking to be, I think, get rid of all the carbon creating cars, zero emissions by 2025. So they've got certainly a pretty ramped up goal there. Anyway, Craig, thank you so much. Great story. Craig Trudell, he is joining us on the phone from London. I'll make sure his story's out there on Twitter. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Gotta check the clock on it where we were.
Friday. It's Friday. That's where we are.
And chart of the day.
Chart of the day, song of the day. That means Dave Wilson's going to be joining us in just a minute.
He is indeed. In the meantime, let's get back to Charlie Pellet. Check on that trading day. Just under a half an hour to go here, Charlie.
Indeed, things have faded somewhat. Still green on the screen, still on track for records, but well off session highs. Carol Master looking at the S&P right now. Right to the numbers. I'll give you the why in a moment here. S&P up 12, higher by 0.3%. The Dow up 65. That is a gain of 0.2%. NASDAQ up 55, up by 0.4%. But to underscore, both the S&P and NASDAQ are on track for records. Right now, the 10-year down 8/30 seconds, 10-year yield 1.16%. Stocks extending their rally after weaker than forecast jobs data bolstered the case for President Biden's $1.9 trillion coronavirus relief package. The S&P up 12, a gain of 0.3%. The Dow up 64, up 0.2. NASDAQ up 56, higher by 0.4%. Gold, spot gold at $18.12 the ounce, higher by $18, up 1%. Silver advancing today by 2.8%. West Texas Intermediate crude up 1.4%, 57.02 for a barrel of WTI. AstraZeneca's COVID vaccine is equally effective against the new strain of the virus that emerged in the UK, according to a study by its co-developer, the University of Oxford. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he was interviewed this morning on Bloomberg Television and Radio.
Right now, it looks like there's 5 or 6 of these variants that I would say are of concern out there because they possess mutations that we know will either affect transmission or would affect the ability of antibodies to bind to them. Now, the good news is some of the studies, particularly some of the more recent vaccines, have been looking at efficacy against these variants, and most of the vaccines continue to have some efficacy against the variants.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Russian vaccine developers are in discussions with China's CanSino Biologics to test a combination of their shots aimed at better results. Among some of the vaccine names today, AstraZeneca down 1.3%, Pfizer up 0.1%, BioNTech down 0.3%, Moderna is up by 1.3%, Johnson & Johnson up 1.6%. Recapping stocks higher, S&P up 12, up 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. Carol's actually singing to this right now.
Well, don't you know the song?
Just take it away, Carol.
First of all, it's Tina Turner, right?
Take it away.
Is it Tina?
Yes.
Of course it is.
Oh,
yeah.
I know why. See, I already have the connection. I told you I gave this like deep tease early in the show.
He did deep tease you today, Dave.
To this segment.
Well, that's nice. I appreciate that.
So I should have known it was going to be Tina.
Yeah, I mean, didn't exactly take rocket science. Of course, that was her comeback hit. You know, after years of kind of being out in the wilderness, you might say, you know, her version of that Al Green song, Let's Stay Together.
That's what she came back on, man. She is just so amazing.
Well, there you have it. In any case.
Was that on Private Dancer or was that before Private Dancer?
That was, if I'm not mistaken, before Private Dancer.
Okay. Also great. I always think 60 Minutes did a piece on her years ago, and I think she's living in France or south of France, because she had kind of left the United States, and it was just such a cool piece. It was Ed Bradley. Rest in peace. I mean, really just pretty amazing. All right. Don't want to steal your thunder. What do you got for us, Dave?
You realize Tina Turner is now 81?
And I bet...
Just saying.
I can say this as a woman. I bet her legs are still just like rocking.
I don't doubt it. You know, but in any case, you know, Tina, when we think of music, we think of Tina Turner. When we think of stocks or markets in general, it's taken on a whole different meaning. It's become an acronym for there is no alternative.
Mm-hmm.
And, you know, a big piece of the argument, and really it applies to stocks, you got to buy them. That's how this argument goes, is that, you know, bond yields have been so low, you don't earn anything.
really, if you own debt securities. So you got to put your money in equity where maybe you have a bigger potential for gains, and by the way, you get all the dividend income that goes along with having the shares. So really what we're talking about here is the comparison between stock dividend yields and bond yields, and it's one that Savita Subramanian made in her latest report. She's the chief U.S. equity strategist over at Bank of America, and she was making a point that if you look at the situation now, and she took numbers from the end of January, so basically a week ago, 64% of the stocks in the S&P 500 had a higher dividend yield than the 10-year Treasury yield. Then again, Bank of America, they're looking for the 10-year yield to move up to 1.75% this year. And, even with this jobs report, we know that Treasury yields are moving in that direction at this point. So if you just, for the sake of argument, look at 1.75%, Bank of America's estimate, you find out that you're down to 44% of stocks in the S&P 500 with a higher dividend yield, and so on down the line. She goes all the way out to 5%, where you have basically 5% of the companies which have a higher yield. So in other words, the argument for owning stocks for income fades as the yield on 10-year treasuries rises. It makes sense, and it's the question of whether you still are going to be talking about TINA come later this year.
We talked about this at the beginning of the show with Carl, who said that even though the stock market was up, even though the jobs data was disappointing, but this whole idea is that at this point with cheap money, it makes no sense to be anywhere else for most extent to be in the equity market. But the point is, right, Dave, if you start to see the Treasury market and the yield, the gap between equities and fixed income, if you start to see them getting closer, right, that gap getting smaller, then equities maybe aren't so appealing.
Yeah, that's right. If you look at it from a broader perspective, what Bank of America is doing in this case is looking at it on a stock-specific basis.
Correct.
That kind of gets you to the same conclusion. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
You said much more eloquently. I kind of stumbled through that. Wait, I got a question. Wait, the quiz.
Oh, yeah.
I got another question. It is Treasury Secretary Janet Yellen requested an ethics waiver ahead of a meeting of regulators for speaking fees she received from this firm before her appointment. Was it Robinhood, GameStop, Goldman Sachs, or Citadel? And Dave, you can weigh in too.
That would be Citadel.
Yes.
Ding, 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 ding.
Did you get that
Correct.
one right?
Yeah, I got that one right.
That was one of the easier ones again. We're just going through the quiz this week. Dave, it was a hard one. Do you do this quiz?
Well, I tend not to, because let me tell you, by the time I get to 5 o'clock on Thursday, it's like the last thing I want to do is try to rack my brain coming up with answers to questions.
We can do it Friday morning, too.
Yeah, I suppose. But then I'm thinking about what's going on in the market.
I know, that's true.
I'm such a nerd. I won't go home Thursday until I've done the quiz. All right, Dave's going to be back a little bit later on. Right now, back to World and National News. Nancy Lyons, take it away.
Well, Carol, Republicans may not be on board, but White House Press Secretary Jen Psaki says there is vast support from the American people for President Biden's $1.9 trillion stimulus package.
This is something that people want. They want to see it pass. They want these checks to get into communities. They want this funding to go to schools. They want more money for vaccine distribution.
The House this afternoon adopted a budget resolution that clears the way for the stimulus package to eventually be approved with a simple majority and no Republican votes. Tomorrow marks 1 month since the siege on the U.S. Capitol. Today, there are multiple reports that FBI agents swarmed a New Jersey home today and removed a computer, boxes, and other items inside. The search is apparently connected to the storming of the Capitol. The Joint Terrorism Task Force is said to be involved. Republican Congresswoman Marjorie Taylor Greene spoke today about being stripped of her House committee assignments by her colleagues.
I've been freed. I do. I feel freed.
She was removed from the committees for espousing conspiracy theories and appearing to endorse political violence. Actor Christopher Plummer is dead at the age of 91. According to reports, he died peacefully in his home in Connecticut. The actor is known for high-profile roles in The Sound of Music, The Man Who Would Be King, and Beginners, for which he won an Academy Award for Best Actor in a Supporting Role. He played a man coming out late in life.
I don't want to be just theoretically gay. I want to do something about it. I want to do something about it. I want to do something about it.
Plummer is survived by his wife of 53 years, Elaine Taylor. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, got it, Nance. Thank you so much. You are listening to Bloomberg Business Week. So Tim and I want to bring you a story on the Bloomberg. Has to do with real estate and something we know Bloomberg terminal readers like to know about. And this talks specifically about Manhattan office prices. Tim's seen falling as much as 30% in a year. And we've been wondering about the shutting down of offices, we see the boarded up buildings certainly in and around Manhattan here. Just wondering, ultimately how it will play out and what it will mean.
Excuse me, I got to turn my microphone on. It's a Friday. This, according to Tom Shapiro, the chief investment officer of GTIS Partners, saying, quote, the notion of the market dropping 20% to 30% over the next year or so is not a tough call. Look, it makes sense, but here's my question for you, Carol. I talk about this a lot. I think people miss the office. And we talked about this earlier with Manpower Group, with Becky. The fact that it is difficult for a lot of people to work from home. And yes, you have to work from home if you're doing virtual school and your child is not old enough to actually, take care of themselves, like in high school or something.
Right.
And there's no option there. But especially if you're in a smaller space, which many people in New York City are, like you want to be in an office because it is a better environment for working.
Right.
It's not the same case around the country, I should say.
No.
But we're talking about Manhattan right here.
Exactly. And I agree with you. And I think we've seen this play out for younger individuals who might be sharing an apartment with other
oh my goodness,
single individuals. And so
people with roommates right now.
Exactly. And I think that's been really tricky for those. I feel like when I talk to people, there's some who are like, I'm great at home and I'm doing as much as I ever was before. And there are other folks who say, I do miss the culture, the running into my colleagues and stuff. So I'm not quite sure how it's going to play out. And I do wonder whether employers are going to be as flexible going forward. I don't know.
Somebody tweeted this morning, does every phone call have to be a Zoom call now? And which I think is something that a lot of people relate to. I don't remember who tweeted that. I'm sorry, but it was a tweet.
I'm in with that. I've started saying to people, like, we can just do a phone call.
Yeah.
Like, call me on my cell. I'm good. All right. You're listening to Bloomberg Radio. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow higher, S&P, NASDAQ, both on tracks for records. Stocks are extending their weekly rally after weaker than forecast jobs data this morning bolstered the case for President Biden's $1.9 trillion coronavirus relief package. S&P up 13 right now, a gain of 0.4%. NASDAQ also at a record, up 66, up by 0.5%. NASDAQ 100 index up by 0.2%. Dow Industrials up 87, higher by 0.3%. Dow Transports up by 0.6%. Russell 2000 up another 1.3% so far this year. Now the Russell 2000 is up by 13%. 10-year up 1.17%. 10-year is down 9/32. Gold up 0.9%. Silver up 2.8%. And West Texas Intermediate crude 56.98 a barrel, up 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close. Prabha Ram is with us, portfolio manager at American Century Investments, roughly $215 billion in assets under management. And she joins us on the phone from New York City. Prabha, good to have you here with Tim and myself. I want to point out to our listeners and our viewers on YouTube that your American Century focused dynamic growth fund, which you are involved in terms of managing, has returned on average nearly 32% annually over the past 5 years, putting it in the 98th percentile according to our data. So kudos to you, because it's not always an easy market environment.
It's not. Thank you, and thank you for having me.
How does it look this year? I mean, how are you kind of positioning yourself?
So, we focus dynamic growth is unique in that we look at companies for the portfolio that are in the early and rapid growth phases of the business cycle. So we look at the business cycle instead of the size of the company and where exactly they position in the market, but just from a business cycle perspective. So you said the name, focused and dynamic growth, and that's exactly what we are. It's 30 to 45 stocks, and the focus is on, just innovation and disruption to business as usual DNA. And then you try to pick them at the earlier rapid growth phase, and then we tend to hold them for very long periods of time so we can just ride up that growth curve. And obviously, we're looking for solid management teams because these are big addressable markets, but that doesn't mean you just go out and get it. So, people that can articulate a vision and then execute against the vision. So that's my job day in, day out.
Well, you took us to one of the big stories of the week. You talk about solid management teams and visionaries. Amazon, Jeff Bezos, a shocker to all of us that he was stepping down as CEO. Does that in any way, Amazon's one of your top holdings, does that in any way change your thinking about Amazon?
It does not, because I think, the replacement in Andy Jassy is just the right person for the job. I mean, he has been a staple at Amazon for 20 plus years. And, he, in his own words, he has said, he's been there a long time and drunk the Kool-Aid, and it's good Kool-Aid, So obviously, that's a good transition. He obviously has experience in all parts of the business, the retail part, and, going from just an owned retailer to a marketplace, and then now as the head of AWS, which is highly profitable. So he's seen all portions of the business. Listen, we're always concerned when a founder, CEO, and someone with, Jeff Bezos' track record leaves. But as replacements go, this is a strong bench, and, this seems to be the best person from the bench that's stepping up to the job. So we're quite hopeful. And obviously, the business is well set up and has incredible traction and momentum, and, that should continue.
Hey, Prabha, how are you feeling about Tesla right now? I mean, it's up more than 20% so far this year, trading at about $151 a share. Is there more room for Tesla to move higher, or are you thinking about rotating out?
So, Tesla has been a very long-term holding. So we have other sister portfolios. So we've owned Tesla since 2013 in other sister portfolios, and Focus Dynamic Growth since 2016. And, I don't have to tell you guys this. It's a multidimensional innovation disruption story, a big addressable market. But that all being said, we're fully aware that this one has had a pretty strong run. But, let's break it down a little bit, Tim. And if I can, this is not so secret sauce, so I'm not telling you something you don't know, but Tesla is all about battery production at scale. And that has applications beyond the automotive market, right? And some of that seems to be already priced into the stock. So I'm thinking commercial transportation, energy storage. So if you look around the world, it's the only electric vehicle company with gigafactories in multiple parts of the world, in Nevada, in Shanghai, in Berlin, in Texas. Right. So, and then what is also missed here is, there are prospective revenue pools and some of that is in the stock now. So, for example, as the electric vehicle market gains traction, Tesla themselves, Elon Musk has talked about licensing supercharging stations around the world. There's 16,000 of them now, and that number continues to grow. Another thing he's talked about licensing is just the artificial intelligence, the machine learning leadership in the self-driving space. They are the only company that has 1 billion real-world miles. Like, this is not just practice driving, like my daughter does in a parking lot, right? So it's real-world miles with the autopilot on, and that gives them great information. And then he's also talking about licensing that over time. All that, are future prospective revenue pools, but they do exist. And then the one other thing about Tesla I'd like to point out is that just in terms of factory automation and just the overall engineering there, it's just always pushing the envelope on better design, and that leads to better cost for the consumer, and that keeps going on and on. If I can give you one data point, I was listening to Sandy Munro. I don't know whether you know Sandy, but he had a very successful career as the best car designer at Ford and runs his own consultancy now.
Right.
And he pointed out that on the Model Y, there were 13 design changes on the cooling system just between July and September. And in his experience, and he's been in the auto industry a long time, a traditional company, one change takes a year because of the bureaucracy and it flows up and down the pipeline. So those are all some of the things we're excited about. But guys, we're not blind to the fact that the stock has had a huge run.
Right.
But, it's early days in the electric vehicle market. Yeah. So, we're still hopeful, but, fully understanding that we risk manage our positions. So obviously, we are aware of the run.
I have to say, I loved that deep dive into Tesla. That was brilliant. And it looks like it's your number one holding. And I've heard a lot of people who would agree with you about, we need to think about, I wonder, is it more of a battery company, and are they going to be the operating platform for many going forward? Hey, just quickly, my understanding you also like Chipotle. Got to be really fast, just got about 25 seconds. They came out with earnings this week.
Yes, they did. And this is one, I call it a digital transformation story.
Yeah.
So think about it, they only have 60% of dining rooms open, and each of them can have a max a third capacity. So they're down to a fifth of the traffic they had pre-pandemic.
Right.
But then the January comps are up 11%. And that's because of, Carol, if you don't have the app, it's a great app. You can store your favorites. If your family has allergies, you put all that in. And then the second leg is just how beautifully they've set up the back office, the kitchen to handle all these digital orders. And really,
Prabha, we have to run. We're going to get you back, though, because I love talking these names. Prabha Ram over at American Century.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange. It is on to the weekend. It is on to the Super Bowl. The Dow, the S&P, and NASDAQ all advancing. Stocks extending their weekly rally after weaker than forecast jobs data bolstered the case for President Biden's $1.9 trillion coronavirus relief package. Now on the week, what a week for the S&P, surging this week by roughly 4.6%. Today, a move higher at a record. S&P up 15 to 38.86, up by 0.4%. The Dow up 92, higher by 0.3%. NASDAQ surged 78 points today, up 0.6%, bringing the year-to-date gain on the Bloomberg to 7.5%. 10-year down 9/30 seconds. 10-year yield this Friday, 1.16%. Gold up 0.9, 18.10 the ounce. West Texas Intermediate crude up 1.3%, 56.98 a barrel. Cannot ignore Brent closing in on $60 a barrel. Also can't ignore silver, up today by 2.7%. So a big week for earnings is behind us. Gina Martin-Adams is chief equity strategist at Bloomberg Intelligence.
Over the last week, we've seen a remarkable turnaround in performance for the stock market at large, back towards cyclicals, back towards risk. And I think that's because we finally started to see analyst forecast estimates for 2021 growth improve. Even with the beats to revenues and EPS, analyst forecasts are moving up for the year ahead.
And speaking of risk, today we saw GameStop shares advancing 19%. However, on the week, GameStop down 80% for the worst decline on record. Peloton Interactive says it can't keep up with surging demand for the company's tech-focused exercise machines. Peloton taking a tumble today, lower by 5.9%. After earnings, Estee Lauder up today by 7.8%. Again, recapping the Dow, the S&P, and NASDAQ all move higher. S&P at a record up 0.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Whoa, yeah, what I say. Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, everybody, time to take a little bit of a deeper dive into the trade today. And Charlie, of course, breaking down those closing numbers off our highs and lows of the session. A very different tone, if you will. And if I take a look at the major equity averages over the last 5 days, 3.9% higher, Tim, on the Dow Jones Industrial Average, 4.6% higher on the S&P 500, and a 6% gain in the NASDAQ. And remember, we were down last week.
Hey, guess what? There's I'm seeing a headline about GameStop falling 80% this week for the worst decline on record.
So
is the GameStop trade over?
I don't know. You know, that's a really good question. And if so, think about how quickly it shot up and how quickly it came down.
Yeah, I mean, I think, obviously in hindsight is 2020, but there were a lot of people saying at the time this was not going to last. Industry groups.
Yeah, let's do it.
Taking a deeper dive into the S&P 500, materials higher by 1.69%, communication services by 0.9%. Information technology, though, rounding out the bottom, the only laggard in the S&P 500, Bloomberg Industry Groups, down more than 0.2%.
Yeah, and if I look at the S&P 500, 320 names in the index higher today, so we definitely saw a risk-on trade, 184 lower, 1 unchanged. And interestingly enough, in a day, we heard Charlie talking about it throughout the day today, in a day when we saw a disappointing labor report, but bad news is good news in terms of the expectations that more relief will come, whether it's in the way of that COVID relief, massive stimulus plan, or whether or not we continue to see the Fed keep rates really low. And so you've got really a lot of investment money chasing yield here.
Do you know who loves to talk about GameStop?
Sarah Ponsek.
Bloomberg cross-asset reporter Sarah Ponsek, who joins us now. Hey, Sarah.
Hey, I was just joking around that today I had to talk about the jobs report and the Fed on Bloomberg Television and Quick Take, and I almost felt like I forgot how to. I said, no, I can only talk about Reddit these days.
Isn't it funny how in the last week and a half how the conversation has changed so quickly?
It really has. It really has. And, this week, at least the last couple of days, it does seem like the tide is starting to turn. Granted, and I will get it out of my system, GameStop today was up about 20% or so after Robinhood did take off all restrictions. So there we have it, a rough week But we did have a comeback today for you asking whether or not the trade is over. But underneath the surface, you look at the S&P 500 performance this week, the reflation trade really is coming back. We have energy up more than 8%. You have financials up close to 7%. At the same time, look at WTI crude oil. Charlie Pellet mentioned Brett, but if you look at crude oil, 56.96 a barrel. That's the highest in over a year now, highest since January of 2020. So we're seeing this return. I'll also mention small caps, the Russell 2000, up more than 7.5% this week. That was the best week since all the way back in June. And that week was when there were a lot of high expectations and hopes about the reopening of the economy. So underneath the surface, you really are seeing this reflation trade take hold once again. And it seems subtle and quiet, but it certainly hasn't been when you look at the weekly returns. And today you have the S&P, the NASDAQ, and the Russell 2000 all closing out the week at record highs.
So in terms of things like GameStop and the meme stocks, Sarah, what I do wonder is, did the markets work? Did we see, the financial markets, the capital markets, did they work well considering how it kind of is finding an equilibrium, it feels like, or getting closer to one?
It's a great question. I asked the same question to Larry Tabb, who's head of market structure research at Bloomberg Intelligence. And what he said was, the market works. This is what the market is supposed to do. You look at supply and demand, and there happen to be plenty of demand for GameStop shares, GameStop call options. Meanwhile, you had a very heavily shorted stock and a short squeeze. But if you look at price discovery, you would say the market did what it was supposed to do over the past couple of weeks. Nothing was broken there. More so, when people look at what happened over the past couple of weeks and ask if the system is okay and if anything needs to change, it's more so looking at settlement, looking at possible regulations over shorting companies in more esoteric areas of the market like that.
Right. And Janet Yellen kind of concurred, right? She pulled a group together and found the market infrastructure, quote, resilient amid the frenzy. So she found the same thing. All right, kiddo, have a good and safe weekend. Stay warm. Sarah Ponzak, thank you so much. Bloomberg News cross-asset reporter.
Hey, if you want to hear more from Sarah, catch Sarah's podcast, What Goes Up with Mike Regan at Bloomberg.com or wherever you get your podcasts.
This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Dave Wilson, happy Friday. Happy Friday. What is your stock of the day?
Bill.com Holdings, Tim. The company runs an internet-based billing network for small and medium-sized businesses. The company's website calls it, quote, the intelligent way to create and pay bills, send invoices, and get paid. Now, Bill.com was founded in 2006 and went public in December 2019. The ticker, as you might expect, is BILL, B-I-L-L. The shares rose 61% on their first day of trading and took off from there. Last year, they more than tripled. Now, Bill.com faltered in January as the shares fell about 11%. The loss was recouped before the release of fiscal second quarter results late yesterday, which triggered another surge. Bill.com extended a streak of beating analyst average revenue estimate in the Bloomberg survey by more than 10%. Subscription and transaction fees, which account for the bulk of revenue, rose 59%. While the company posted a wider loss than analysts expected, the loss did narrow from a year ago. Now, the results sent Bill.com shares to a record. They jumped 32%. That was the biggest gain for the stock since the first day advance.
Stock now up 35% so far this year. So thank you very much for that Friday run-up.
Absolutely.
Yeah.
And it's now a $15 billion company by market value. You go back to when it was first public, it was more like $2 billion.
That's a big difference. All right, good stuff as always. Dave, have a good weekend. We'll see you on Monday. Dave Wilson, our Bloomberg Stocks editor. What are you doing this weekend?
Try to avoid the snow outside on Sunday. It's going to be a good weekend, though.
Yeah.
Play outside a little bit with the little guy.
Oh, it's supposed to be a little warmer.
Yeah, Saturday's
Aren't you going to watch something interesting?
The movie? The documentary? Yeah, Fake Famous.
Yeah.
New documentary on HBO. Nick Bilton is the director, and he's going to join us next week on Quick Take. and on the radio as well.
Yeah, we're looking forward to talking to him about that. Really looking at social media. Have a good and safe weekend.
Thank you.
Glad the car has been dug out.
Yes, the car is out.
Good stuff. Until we get ready for the next snowstorm. All right, my co-host, of course, Tim Stanovic. All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says today's jobless numbers show that the economy is still in trouble, with a gain of just 49,000 jobs last month. That was lower than expected. He has reinforced the need for his $1.9 trillion relief package, even though Republicans are unwilling to support relief at that level.
What Republicans have proposed is either to do nothing or not enough. All of a sudden, many of them have rediscovered fiscal restraint and the concern for the deficits. But don't kid yourself. This approach will come with a cost. More pain for more people for longer than it has to be.
The House today approved a measure that would allow them to move forward on the stimulus plan using budget reconciliation, which will require a simple majority to pass. Nearly a month after the siege at the U.S. Capitol, evidence is steadily emerging of the preparations for the events of January 6th. We hear more from Bloomberg's Nathan Hager.
The leader of the Proud Boys Seattle branch was charged earlier this week for his role in the attack. Prosecutors say Ethan Nordine started going online in late December, asking for donations of tactical supplies. In other cases, prosecutors say the Oath Keepers held military-style training sessions in Ohio and planned a communications strategy for the riot. So far, more than 175 suspects are facing charges, including leaders of the Proud Boys, as well as members of the Oath Keepers and other loosely organized extremist groups like the 3 Percenters. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So, we had Elon Musk tweeting about cryptocurrencies, specifically supporting Bitcoin this week. And that combined with a record run-up in Ether helped take the market value of digital tokens to an all-time high. It was about $1.17 trillion as of Thursday. Well, our Business Weekend show with myself and Tim Stanovic features an interview with cryptocurrency investor Michael Saylor. He's founder and CEO at MicroStrategy. And in this little clip from the interview, he talks about how much of his balance sheet is committed to Bitcoin. I'm just going to tell you, he's been buying it up. He was last year, and he is again this year.
Well, more than 100%, because we're leveraged. We've invested all of our free cash, and we've borrowed $650 million. So, I don't know, 200% of our balance sheet, something like that. But we're up about 1.2 billion since we started buying. So we have a lot of Bitcoin. In terms of our strategy, we were buying it at 10,000. We were buying it at 11,000. We bought it at 19,000, at 21,000, at 31,000. And just today, I announced to the world that we bought our last batch of $10 million worth at 33,800. I think we'll be buying it forever.
And that, of course, was the founder and CEO and chairman of MicroStrategy, Michael Saylor. You can hear more of that interview in our weekend show. It's on Bloomberg Radio. It's also on our podcast feed at Bloomberg.com. And he's just really an interesting individual. And I've got to be quite honest, kind of before the GameStop frenzy, we had the Bitcoin frenzy. Remember, we were talking about it kind of nonstop late last year. It ran up 305% in 2020. It's rallying again this year. As I mentioned, the value of more than 6,000 tokens when it comes to digital currencies tracked by CoinGecko was an unprecedented $1.17 trillion on Thursday. We had Elon Musk talking about it. Anyway, this individual, Michael Saylor, one of our Bloomberg Business Week listeners, was like, you got to talk to him. You got to talk to him about Bitcoin. So we got it for you. So check out Bloomberg.com and our weekend show on Bloomberg Radio. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Best week for the S&P 500 index since November. A record today for both the S&P and NASDAQ. S&P up 15, ending the week at 3886, higher by 0.4%. NASDAQ up 78, higher by 0.6%. Year to date, NASDAQ now up 7.5%. The Dow up 92, up by 0.3%. 10-year down 8/30 seconds. 10-year yield 1.16%. Stocks extended their weekly rally after weaker than forecast jobs data bolstered the case for President Biden's $1.9 trillion coronavirus relief package. 10-year, the yield there 1.16%. Gold up 0.9%, 18.10 the ounce. Silver up 2.7% today, and West Texas Intermediate crude oil up 1.3%, 56.97 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Well, we've talked with a few members of his family before. We've talked with his dad, well-known venture capitalist Alan Patricof, his sister-in-law Kelly Sawyer Patricof on Baby to Baby, and I kind of just imagine that their holiday get-togethers, the conversations around the dinner table must be a lot of fun. He is, in his own right, very accomplished. We're delighted to have back with us an investor in finance, entertainment, technology, and the sports space. Mark Patricof is founder of Patricof Company. He joins us on the phone in New York City, and Mark is here along with Bloomberg News Wall Street reporter Sonali Basak. She is in the studio with us. So from Sonali and myself, Mark, great to have you back.
Well, I'm glad to be back. I appreciate it. You having me, as always.
Yeah, and I was thinking the last time we talked with you on air here on Bloomberg Business Week was, I think, in late March. So tell us what your life has been like since then.
Well, in some respects, it's been, very different than I would have expected. On the other hand, I think we all got settled into a new routine, and then you sort of go back into your same old habits. So I've been working. A company, which I started 2 years ago, I was very worried about when the pandemic hit, and we moved up and kind of closed our office, and everybody went to their respective homes and learned how to work remotely. But we've settled in, and it ended up being a very productive year. We made half a dozen investments, signed a lot of new clients. One of the benefits of our business in terms of the pandemic was all these professional athletes that we represent had meaningful amounts of time off when their seasons were put on hold. So we got to know them better, which was great. So there was a window of time where professional athletes had to think about their lives without sports. And I think we took advantage of that very effectively. We hosted monthly calls for them with different industry professionals. We had the founder of JetBlue, David Neeleman, speak to them. We had Bill Clinton speak to them. We had a hedge fund, manager. We had different kinds of industry opportunities for them to explore. We hosted Zooms for our clients with different partners in the private equity world to help them expand their individual network. So I thought it was great. And then in October, we went back to the office. So I'm actually in my office today. We're a small company, so we can manage COVID effectively and safely as a small group, where obviously larger companies can't. But it's certainly been an interesting year. Some of the deals we did in the back half of the year, we saw depressions in valuation, which was, I think, helpful in terms of our investment thesis and how we got to the finish line. So it was an interesting but unique year.
Well, a lot of your clients, these professional athletes, we just saw A-Rod come in and start a blank check company. We're seeing major athletes become major investors. And, your holdings, right, have included some really well-known firms, SpaceX, Topgolf, Cholula Hot Sauce, The Real Real. Why is it? And, do athletes even make good investors?
Yeah, I think it's like any other category of people. There's a subset of professional athletes who've made it their business to learn how to dispose of their capital wisely and to choose the right advisors and to have a strategy that matches both their interests and their liquidity. And our goal as a firm was to create this kind of unique investment banking model where we supported professional athletes with a set of investment banking services that would help them evaluate, identify, and pursue the right opportunities for them. Secondly, for us, and counter to my family history, venture was really not in our mandate. So we tried to articulate a value proposition to professional athletes around later stage growth equity and private equity deals, where the downside for them would be a 1x, let's say, not a 0x. And while you'd be giving up some of the upside, possibly, to 3 or 4x your money in a 2 or 3 year period is a really good way to build net worth. So we went into Cholula, and 18 months later, we nearly 4x'd our money. That's a really good opportunity for a professional athlete, in my opinion.
Right.
Much better than throwing, $150,000 into a startup and then wondering why you never hear from the CEO again, which is, happens frequently. So it was really for us about finding, athletes with an interest or an aptitude for business and articulating for them the reason why we started the firm and then having them kind of buy into that.
So, Mark, I'm curious with the GameStop craziness over the last couple of weeks. Have any of your, sport athlete investors or athlete investors been saying, wait a minute, should we be doing something here?
So funnily enough, we had maybe a half dozen calls that kind of one big day. I think it was a Monday.
Yeah.
And we told everybody that, in our opinion, just lay low. One of our guys did invest. I would tell you that he is in the top 5% in terms of intellect and just general kind of awareness and exposure in the business world. He just told me today that he lost $10,000 in both AMC and in GameStop, but he did it, as an experiment to kind of learn something. So, I think that's an expensive lesson to learn, but $20,000. But I think for the most part, things like that, where we had a chance to, signal back to people just to kind of learn and watch, don't participate.
And his name is? No, just kidding. Just kidding.
You know his name, but I won't.
Fair enough. Are you getting the same stuff? We've got about 45 seconds, and then we'll come back and talk some more about same thing with Bitcoin. Are you finding a lot of your athlete investors are interested in Bitcoin or are investing there?
Yeah, I think more so than kind of something like a GameStop, which was sort of a market aberration. I think, Bitcoin and virtual currency is an area of interest for a handful of people, and the ones who studied have actually done pretty well.
All right, sit tight. We're going to come back and talk some more. Mark Patricof, we're going to come back to him, founder of Patricof Company. It's a private investment platform, and it's all about meeting the needs of athletes and sports professionals. It's backed by JP Morgan Private Equity Group, but it's really fascinating, Shanali, to hear about, the kind of investors that he's dealing with and what's on their minds.
Yeah, absolutely, and it says something for everybody else as they look to the markets too.
Exactly. We're going to talk a little bit more with him and get a little bit more into some of the interesting trades that we're seeing and where he finds opportunities going forward, certainly for his clients. And maybe we might talk a little politics.
Yeah, little politics sounds good to me, Carol.
All right, we're coming back on Bloomberg Business Week. Carol Master, Shanali Bosick, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio, along with our Bloomberg News is Shanali Bosick. We're going to come back to Mark Patrikoff, founder at Patrikoff Company, talk a little bit more about what's going on Wall Street, but also talk a little bit of politics. We'll get back to him in just a moment. Right now, it's back to Charlie Belli.
Hi, thank you very much. What a week for the U.S. stock market. Right to the weekly numbers first. This week, NASDAQ surged 6%. The S&P, in perspective, 4.6% higher this week. The Dow advanced 3.9%. And for the year, NASDAQ looking at gains right now of 7.5%. A lot of questions, though, about lofty valuations. Stocks extended their weekly rally after weaker than forecast jobs data bolstered the case for President Biden's $1.9 trillion coronavirus relief package. S&P up 15 today, up 0.4. The Dow up 92, up 0.3. NASDAQ today up 78, up by 0.6%. And to underscore both the S&P and NASDAQ, both at records. Savita Subramanian is head of equity and quantitative strategy at B of A Securities. And on Bloomberg Television and Radio this morning, she told us she is concerned about lofty levels for the S&P.
I think what we're seeing right now is just these levels of dangerous optimism building, especially around the S&P 500. Not so much the Russell 2000, not so much Europe or emerging markets, but where we're seeing the bullishness is really concentrated in tech, in the S&P, in the NASDAQ. And I think those are signs that maybe you want to cool your heels on the S&P and look to other areas for your, real bang for your buck.
In corporate news, Pinterest surged as the digital scrapbooking and search company reported sales that topped estimates. Pinterest up today by 5.3%. Peloton Interactive sank after saying it cannot keep up with surging demand for its exercise machines and warning that profit will be squeezed. Peloton shares getting a workout today, lower by 5.9%. GameStop shares up today by 19.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. I want to get back to Mark Patrikoff, founder of Patrikoff Company, and he joins us on the phone in New York City, along with Shanali Bosick, a Bloomberg News Wall Street reporter, and she's in our Interactive Broker studio in New York. And Shanali, you and I were talking in the break. We got to talk politics with Mark.
We've got to talk politics with Mark because Mark is one of the few people on Wall Street that really talked to me about Georgia, for example, when a lot of people on Wall Street were very shy about the topic. But, now that we're past the presidential election, now that we're past the Georgia races, what, Mark, is the next shoe to drop? What are people on Wall Street really looking for from the Biden administration?
I mean, look, unemployment is a disaster. I think we're going to find out a lot about, it's not so much a Biden question as it is, what is the real effect of 2020 going to be on the economy? I mean, there's all these false props that make you feel better, and then you realize it's just not possible that there's not going to be some pretty violent backlash. So I guess the question is, how far ahead of that backlash could Biden get, and can he do it quickly and effectively, and can he communicate his ideas? I mean, there's a lot going against us, so it's very worrisome. But from a politics standpoint, I think Wall Street, certainly, for me, the mayoral election is front of mind already. Mm-hmm. I mean, New York's a mess. I am very focused on getting the right person in Gracie Mansion, and I think I'm not alone in that.
Who's the right person?
Ray McGuire, for me. Hands down, Ray. I think he is a tremendous combination of business acumen and compassion, doing it for the right reason. He gets New York. I think he's had a ton of success, but he's done it in a modest, kind of thoughtful way. I think he's a powerhouse. I think he would actually profoundly improve some of the major problem areas in New York.
Well, let's talk about those problems, right? I mean, New York has a host of them. What do you think the not top one or two issues are going to be in this race?
I mean, early childhood education to me is just critical. I mean, I think about how to deal with some of the issues around diversity, and it has to start there. I think transportation in New York is a huge problem. I mean, the city is filthy, homelessness. We've got so many different issues that seem to have been forgotten over the last number of years, and the office was so politicized that I think someone like Ray can actually bring some semblance of a an operational vision back to the office, much like Mr. Bloomberg did when he was mayor. But I think for us, in terms of where we can put our time and money, as if you want to count me as part of us in terms of Wall Street, it's got to be somebody who thinks about New York first, not about his or her political ambition.
Well, how do you feel about some of the other candidates, right? I mean, Andrew Yang is ahead in the betting odds.
Well, if you ask me, Andrew Yang doesn't have much to say about why he's doing this. He certainly has name recognition. And I thought he did a decent job, by the way, on the national stage. But I have no clue as to, other than for the reasons I just said, I think Ray's not doing it, which is to advance his political career. I have no clue why he's coming here to do this. And I also haven't heard one meaningful idea out of his campaign. But look, there's 20 plus people running, and whether it's Stringer or Adams or there's credible people, so it's going to be interesting to see how it plays out. But I think the idea of, look, I thought Mike Bloomberg was a terrific mayor. It's not the only way to do it, but it's certainly one way, which is to take a business-minded approach to running a city. It seems to me that the mayor of New York is in a way, such a nonpartisan office that you need somebody who's, a CEO, not a politician. And a lot of these, candidates are career politicians.
And of course, we should point out that the former mayor Bloomberg of New York City is, of course, the founder of Bloomberg LP and Bloomberg Philanthropy. And of course, Bloomberg LP is the owner of Bloomberg Radio and Bloomberg TV. So we just wanted to put that out there. So listen, Mark, we unfortunately only have about a minute or so to go. And I do wonder, what is the most important thing that you think Wall Street, though, needs from this new Biden administration?
Get people back to work. Unemployment is out of control. And I don't even think the numbers are accurate. And I am terrified for our country when I think about the amount of people who have been out of work for 6 months or longer. They stopped counting them in certain cases. So if we need a stimulus package that has a vision for employing the average worker. It's just critical. I mean, I don't know yet the impact of 2020, but I think we're going to see it in expanded unemployment numbers. So what can the Biden administration do to stem those losses and to restore some semblance of a process to, reduce the unemployment rate? That's I'm not an economist, but that's certainly what I worry about the most.
Right. And it certainly was something that we saw in today's monthly jobs report for the month of January, because what we really saw was more people leaving the workforce, and that's certainly discouraging. Mark, wish we had more time, so come back real soon. We always love talking to you. Mark Patrikoff, founder of Patrikoff Company, joining us on the phone in New York City. And of course, our own Sonali Basak, who covers Wall Street for us here at Bloomberg News. What is great about Mark is just somebody who covers so much in terms of breadth.
And is super straightforward and honest about the real challenges we are facing. The numbers are bad, really bad, Carol.
Yeah, and really just cuts to it. Sonali, thank you so much. Great to have you here as well. Let's get back to world and national news. Back on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. An intruder at Joint Base Andrews outside of Washington yesterday was able to board one of the planes that only has exclusive access, and that's prompting the Air Force to review its security procedures. Pentagon Press Secretary John Kirby says they're leaving it up to the Air Force to prevent further breaches.
The Secretary has full trust and confidence in their ability to take a look at what they believe they need to look at for security purposes, and we would refer you to the Air Force for more on that.
Officials say the intruder was not authorized to be on the grounds, but somehow got on a C-40 aircraft belonging to the 89th Airlift Wing, the unit that is also responsible for airlifting the president and vice president, as well as other high-level officials. About half of Americans say the Senate should vote to convict former President Trump at the end of his impeachment trial that gets underway next week, and a majority think he bears at least some blame for the Capitol insurrection on January 6th. That's according to a new AP Nork Center poll. The survey also finds many Republicans still believe Joe Biden's win was illegitimate. Actor Christopher Plummer has died at the age of 91. He's best known for his role as Captain Von Trapp in The Sound of Music. At the age of 82, he also became the oldest actor to win an Oscar for Beginners, in which he played an elderly man coming out as gay.
It had everything in it. It had extreme tender relationships. It was just filled with a marvelous conglomeration of heart and bravery.
Again, Christopher Plummer dead at the age of 91. Global news 24 hours a day and on Bloomberg Quick Take.
So we got some news this week. Nancy, thank you so much. We did get some news this week about General Motors warning that a global semiconductor shortage will temporarily shut 3 of their plants and reduce production this year. So that was one of the things that was on our minds as we caught up with Tom Dahl, President and CEO of Subaru of America. He joined us to talk about the impact of the pandemic and auto sales for this year. And our Business Week Weekend Show features that interview with him. And here's a little snippet of it. He talks about how the economic restart has reignited demand in auto sales. Check it out.
And then as we reopened, as the economy started to reopen, as we got into the late spring and early part of the summer, there was a tremendous rebound. And in fact, if you look at our sales from, I would say, that July period through December, we were actually selling at about a 700,000 sales pace, which for us is pretty good. And that continued over into January. January, we had a record month. We sold 46,400 vehicles, best January we ever had in the history of the company. And we're looking forward to that momentum continuing as we go through the first half of the year, and really as we project into the second half of the year, because with all the stimulus that's currently out there, and plus the stimulus that's currently being proposed, or at least talked about at this point anyway, we think the market in the second half of the year could really pop, and we need to be prepared for that.
That's really interesting. So the stimulus money, is that how you account for a lot of the increase in demand?
I think a lot of the increase in demand had to do with the fact that people are really interested in SUVs and trucks. The truck market and SUV market, including the small SUVs, where we compete heavily with our products like Crosstrek and Forester, those segments are doing extremely well.
And that was the Subaru of America CEO, Tom Dahl, and you can hear more of that interview. It's on our weekend show on Bloomberg Radio and also on our podcast feed at Bloomberg.com. And what I love about talking to Tom is really very real, if you will, when it comes to what the pandemic, the impact of it, and what it was like. And like many companies and businesses, initially really terrified of the impact it would have, and then really finding that business ultimately picked up. All right, check out that interview. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We begin with a developing story. According to sources, Apple has held talks with Hyundai and Kia Motors about building an electric vehicle, but those discussions have been paused recently. Those sources say Apple has also been discussing similar plans with other auto manufacturers. Stocks higher today. In fact, records for both the S&P and NASDAQ for the week. NASDAQ surged 6%. This week, the S&P up 4.6% on the week. The Dow up by 3.9%. Today's numbers, S&P up 15, up 0.4. NASDAQ up 78, up 0.6. The Dow up 92, up 0.3%. Stocks extended their weekly rally on stimulus hope after this morning's weak jobs data. 10-year yield 1.16% this Friday. Gold up 1%, $18.12 the ounce. Silver up 2.9%. West Texas Intermediate crude up 1.3%, $56.98 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So last year, we were with him in Miami for the Super Bowl on Radio Row. This is our third time getting some time actually with him to talk about the big game coming up. I've got to say, though, even last year, I think he let me put on, I don't think, he did let me put on one of his Super Bowl ring, which was pretty cool. We know it's a different Super Bowl this year, and we're bummed that we're not there with him, but great to have with us Super Bowl winning quarterback, college football Hall of Famer Joe Theismann. He's on site in Tampa for the big game, but I understand right now you're on a driving range. Is that right?
I am, Carol. I'm working on, always working on something.
You are.
I'm in one of the bays here, just trying to, although the weather is just absolutely gorgeous. It's 74 degrees here. And,
wow. That hurts.
Kansas City, I think, comes in tonight or tomorrow for the game on Sunday, which is very unprecedented and interesting because under normal circumstances, they would have all the media commitments and both teams would be on site. But this is just a little, again, it's very unprecedented and very different.
Well, let's talk about that because it has been, as I said, last year we were with you on site in Miami because it's different. And, I saw an interview that Tom Brady did and he said, listen, my family isn't coming in. I've been 12 days in this home here in Tampa, planning for the game. This is unusual for me. How does that different approach before a game potentially for the players, how do you think it might impact them or just, impact the game that we see on Sunday?
I don't know if it'll impact the game as much as it impacts the players from a mental standpoint. Physically, you're going to practice, you're going to meetings. But when the meeting is over, in Tom's case, he's been away from Giselle and the kids for, 2 weeks now?
Yeah.
12 days. And so the hardest thing to do when you don't have something to do is mentally stay focused. And there is such a thing as over-preparation or overthinking. It's like anything. It's like the classic example is the markets.
Yeah.
Right now you've got all-time highs. So now you start thinking, well, what happens if this happens? What is there going to be a sell-off? Or is there going to be profit-taking? Your mind starts to play these games, and that's the thing you can't afford to do in football. What I used to do before a game is I would study my game plan on my way to, I would ride with one of the guys, and I would lead through People magazine before the game, just to clear my mind a little bit, and then be able to focus on what I needed to. So you want to have enough creativity in your head that you're not all programmed just to play.
Right, exactly. No, it's I hear that a lot. I tend to be an over-preparer sometimes for interviews, and it's like you got to walk away from it sometimes and just go.
It gets fresh then.
Yes.
It gets a little more fresh.
All right, so having said that, I've got to make you, or at least ask you, the game itself, Brady versus Mahomes, what's your call?
It's not. I like Kansas City in this game, and that's one of the classic ways people look at this game, Brady versus Mahomes. What this game really boils down to, it's Tom Brady versus Steve Spagnuolo, who's the defensive coordinator of the Chiefs, and it's Todd Bowles versus Patrick Mahomes. Of course, Andy Reid is the play caller.
Right.
It's flattering that people always refer to the quarterback winning the Super Bowl. But if you look at Tom's first 3 wins, they were on the foot of Adam Vinatieri. He made kicks that allowed New England to win. Of course, Tom got him in that position, taking nothing away from the absolute greatest quarterback that ever played the game. But That to me, as I watch this game, I want to see what Spagnuolo does to Brady. I want to see what Bowles does to Mahomes. And that way, if the guys are going to be great, then they're going to have a chance to be able to do it, and they're going to do it against somebody that's prepared for them. Last time these two teams played, the score was 27-24.
I was just going to say, were you anticipating that it's going to be a close game?
I think so.
Yeah.
There's only so much you can change.
Yeah.
That's about all you can do, is prepare, and how much do you change? That's the big thing. You've played football all this time, 18, 19 football games. You're not going to throw everything out and start something new. What you're going to do is you add about 15%. You'll add about half a dozen plays, maybe 2 or 3, 4 formations, just to try and create an opportunity for a big play.
So I got to ask you about your old team, the Washington Redskins. We know now they're the Washington football team. Won the division, made the playoffs this year. Good season. With all the changes that you're seeing with the team, what are your thoughts about the direction of the franchise?
I think the direction of the franchise is solid as can be. Making it to the playoffs put a great taste in everybody's mouth for the offseason. As far as the name goes, just to put in perspective, there's so much more than just a name change. The Los Angeles Rams changed their logo on their helmets. That took 2 years. So you have all of the things that you need to go through from a legal standpoint to make sure it's okay. And in the case of the Washington football team, you want to be able to find a name that most people won't be upset with. Somebody's probably going to be upset with it. I mean, that's just, everybody's upset with something. So, but most people, what do they do? How are they approaching it? And how do they feel about it? I think they've done a great job taking their time. And I believe it'll be 2022 before there's actually a new name for the Washington football team. Because we can't stay the Washington football team. That just, I'm sorry. It's got to be something else.
Yeah, it seems kind of like nondescript, unfortunately.
Well, it's like watching white paint dry.
Exactly. Got a name out that maybe you've proposed to them?
No, I haven't really thought about it, to be honest with you. I will as we get more into the off season, but there's a bunch of them out there, and who knows what it's going to be.
So listen, Joe, I've only got a couple of minutes, but I got to ask you, the market. I know when we talked with you down in Miami last year, I think you took a call from your broker, or you were trading GameStop. Were you playing that at all?
I didn't play GameStop, to be honest with you. When stocks get parabolic sometimes, it scares the when they run like that, and we saw it with GameStop. When Robinhood got involved in Reddit and those people started doing that, and they took it up there, a lot of people made a lot of money. But a lot of people make money going the other way, too. Now, all of a sudden, somebody shorted it. So now it's back down. You and I talked about this.
Yeah.
I like cannabis stocks. I think that with this administration, and there's been a lot of talk that there'll be legalization of marijuana in this country, in all the states. And if you stop and think about it from a common sense standpoint, some states have it now. If they were to legalize it, then they could tax it like gasoline and tobacco. Then the government would have a revenue stream as far as money goes, and you wouldn't have to raise taxes. You wouldn't have to hit people. You could, dig into the stimulus packages that have been given out. But you would have a way for the government to be able to collect, like I say, with tobacco and alcohol.
Right.
I mean, and it's coming.
I think
let's put it that way.
Yeah, certainly politically. And I'm just looking at the Advisor Shares Pure U.S. Cannabis ETF. It's up 35% already this year. Joe, never enough time. So I hope somewhere in the next few months we can find some more time with you. You're always a gem to make sure you carve out a little space for us every year. And we really appreciate it. Have fun at the game. Stay safe. And look forward to talking to you again. Joe Theismann, of course, winning quarterback of Super Bowl 17 and joining us on the phone from Tampa. What a week, folks. I want to thank our Bloomberg Business Week team, Sarah Livesey, Reggie Bazil, Nick Falco, Maruf Hussein, Chris Tricomi, Tim Harrow, Charlie Vollmer, Donnie Holloway, Ariel Agami, and Paul Brennan. It takes a village. Have a safe weekend. Enjoy the game, everyone. For Tim Stanovic, I'm Carol Masser. This is Bloomberg Radio.